What is a lapping scheme as a form of financial fraud? Well, generally it involves altering the accounts or accounts receivable specifically to cover up a stolen amount of money applied to that account receivable. So restated, it basically means that when you have an account receivable from an outside party that owes you or the business money, okay, when you receive payment on that account, you steal those funds. And then later, when you receive a future payment from that customer or from a different customer on an account receivable, you take those funds to cover the original account receivable. And then later, a subsequent fund to cover the next account receivable and next and next. So you're hiding the fact that you have absconded with that one account receivable. And if you can make it long enough, oftentimes it's too difficult to track back to how that accounts receivable payment went missing. Okay, so it's, once again, you're overlapping payments of accounts receivable to hide the fact that you've stolen one of those accounts receivable. Now, this generally is only possible when an individual controls both receipts of accounts receivable and the customer billing process, because you'll need to alter the records or at least have some level of communication with the customer about payment, and you'll have to be able to alter those records so that no one else can actually see how you've applied the payments going forward. So a lapping scheme is a form of financial fraud in organizations specifically involving the receipt of payment on accounts receivable.